Hello and welcome to New Waves, the podcast where we dive into one big question. What's making waves in the European climate tech ecosystem this week? Joining me today are Craig Douglas, partner at World Fund, Julia Attwood, head of research at Sightline Climate, and Hampus Jakobsson, general partner at Pay Blue Dot. And in this episode, we break down the IPO plan of Einride, the Swedish company shaping the future of electric and autonomous freight. We explore how the economics work, the climate impact, and whether the mix of freight as a service and SaaS can scale. And finally, we dig into the IPO mechanics. We talk about the 1.8 billion valuation, the revenue multiple, the SPAC listing, and what it means for Europe when another climate tech leader lists in the US. Before we jump in, please don't forget to subscribe on YouTube or to follow us on Apple Podcasts and Spotify. This really helps the show, and if you want to go an extra mile, please share this episode with a friend. All right, let's get into it. Well, hello, everyone, and thank you again for joining me today. It's always my favorite conversation of the week. I really enjoy talking with you guys. We have Craig today, new member of the show. Exciting to have you, Craig. Today, we're talking about the big news in the climate last week. This Swedish company, Einride, is going to IPO in New York for 1.8 billion. Big numbers. A Swedish company again, by the way. Hampus, you're doing super well in your country. Feels like all of the Swedish companies are, growing fast. Julia, let's start with you. Can you please give us a little bit of context around what Einride is doing and their amazing product, which I think is super cool?
For sure. I mean, it is a really fascinating business that they have because there are two major elements of their products. The first is the freight as a service. And this is kind of the physical side of what they do, and they're using that to test out everything else. So it's autonomous and human-driven freight. So they have two options. You can just electrify your fleet and still have people driving it, or you can be using their autonomous vehicle. And the idea there is that you want to make your transit more efficient. You maybe want to cut down on drivers. If you're having trouble hiring them, you can't find them. We've seen a lot of that around the world. And then they also have remote monitoring for their autonomous vehicles in case something happens. So they've got permits for this in Sweden, the US, and they're also operating in the Middle East. So they are physically moving things around in a decarbonized and sometimes autonomous way. Then there's the software as a service part of their business. And this has a lot of different factors to it because they essentially say, come to us if you're thinking about decarbonizing your fleet, you want to electrify it. And we will make a plan for you to make that happen. And then once you have, then they have their software that allows you to optimize your charging and optimizing your routes. So it's software that they are proving out in their freight as a service model. I love this kind of business model where you're both making the software and demonstrating how it works. Obviously, it's very CapEx intensive. By Sightline's count, they've raised about $750 million, about 300 million of that in debt funding. And they are post-revenue. They are already making money from their freight as a service and software as a service. And they've got some big customers. They say on their website they're working with Carlsberg, Oatly, Lidl, PostNord, a lot of big names that move a lot of stuff around.
Hampus, Craig, I'm just curious. Julia made an interesting comment on kind of integrating everything, right? This business is basically, they do hardware, they do software, they do a bit of everything. What's your usual take on that when you have a business that comes to you and says, basically, I want to vertically integrate whatever solution?
I love it. We have plenty of companies that our companies do it. I think it's amazing because I think that I don't have patience for customers sometimes in old industries. And I think that if you're trying to sell your logistics planning software to old industries, you're pushing a rope. You're coming in and saying, if you just change all these processes, and by the way, these vehicles, and by the way, you recruit drivers, and by the way, how you handle this, then it's going to be great. Then you're kind of like McKinsey with software. You're coming in and you're giving a recommendation and you're having a lot of software. The probability of your customer or your potential customer to actually implementing everything you're saying within, a decade is very low. So I love like when a company is saying, we deliver the outcome of the product. And of course, we're going to build tons of software to improve our margins. Because if we don't, then we're going to have fairly bad margins. And the reason this industry is a quote unquote not venture industry usually is because if you don't have enough software and data, it's a pretty low margin industry. But it's a large industry. Like, we just love this way of working. You solve the problem, the customer's happy, you have to own the problem of making it more efficient every time.
I mean, the big advantage from my perspective is you're more in control of your own destiny. Right? That's kind of the biggest issue in a lot of these markets, particularly if you're doing hardware combined with software or business model innovation, is that you're reliant on too many third parties and you're reliant on too many others to go on the journey with you to actually be able to ultimately sell and make the margins that you need. If you have everything in-house and you actually understand where the benefits are, you can capture more of that margin yourself. But it does mean that, as Hampus said, you need to have the customer come on board that journey with you. And in Einride's case, is an interesting one because how much is the customer actually buying versus buying a service? And if they no longer want to use you, like, replacing you is potentially more difficult. So you're potentially in for the long haul. So there's pun intended. You can actually, there's a big benefit for doing that. It also means you can capture more of the margin than your elsewise competitors might be able to. But it can be quite expensive to get there.
Yeah, I mean, obviously the capex topic here. I mean, obviously, for example, Julia, you said a few numbers, but like 700 million raised, the IPO is going to be 1.8 billion. Like, just like the size of the amount of money that was invested in that company, although there are some debt element to it, versus like the IPO valuation, tells you a bit of that story. Hampus, you talked about the markets. It's funny because we were talking, I think, when was it, like 2 weeks ago, about your thesis on what you called boring industries. Does that count as part of your boring industries thesis?
Totally. I mean, logistics, warehousing, cold storage, like all of these, like, they're insanely boring, right? Like, they're VCs tend to shun them, or I mean, used to shun them. I think that this is my favorite industry. I think what's difference between Einride and a lot of other companies, I think, and I'm not sure if that's, smart or not smart, is the fact that there's some companies that decide to build their own hardware, like new, completely amazing, impressive hardware. And there's some that actually use existing hardware. And I think the question is, like, how much capital can you raise? Because I think if you can raise 500 plus million and you can, get a very, very impressive R&D team that helps you build robots or fusion reactors, whatever that you need, then I think that go ahead and do it, right? You're just catapulting yourself 10 years into the future to improve those margins again. Maybe to go from 5% margins to 25% margins, removing that software team mentally. But I think the question sometimes for me is that is there an interim step? And that depends on so many things, that if it's better to actually use existing hardware. Like, if it would be better for an Einride to actually use existing trucks, not have them to be autonomous, to just say, we will recruit drivers, we will drive this, we will figure it out, and then we'll mount cameras and LiDARs and all of it, so that we'll gather all the data, so that in 5 years, we either can, build our own trucks, or we can be the best partner for somebody who wants to build autonomous trucks. And I think that's the thing I always think about when looking at these companies, that are you trying to make it sexier than it needs to be?
I mean, in this instance, I'd argue doing it the other way around is actually going to be more of a challenge than building a platform from the beginning. An interesting kind of point on the debt side of things, and this company's raising a lot of money. They've gone through a couple of restructurings as well, and it's been expensive to get here. But if you've got a platform that works and you've got customers who are taking comparatively long-term contracts for delivered services, actually raising debt on the back of that should be comparatively simple. What it takes for Barclays to be able to, how long does it take to pay off the cost of the vehicle, and what the customer contracts, as long as that is relatively secure and they're comfortable with that, raising debt and raising large quantities of debt. I mean, the asset financing and vehicle financing is a very, very well-established market, but you have to get your product to the point where people can accept that it's going to last that long. And you have to get your customers to the point where they're going to make a long enough commitment for you to be able to raise that. So once you're there, you should be in a good position, but getting there can be very difficult.
I think the headache here for me is the fact that would they have to build their own autonomous, novel robot trucks or not? Because I think that is the question mark for me when I see some companies. Because I think that the competence of running a logistics company and the competence of building autonomous trucks are very different problems. But the other company that they're building inside is, of course, the software company of fulfillment and logistics planning, which of course they need to build. So I think that looking at some of these companies, I always try to figure out, like, you know. And also when you go for debt financing, the problem is, like, you're building a completely novel form factor. If you're Barclays and looking at it, you're like, I don't know, if that truck will even work. So, like, what are we going to do if it doesn't work? Then we're going to sit here, and then they say, no, we're also going to build some, buy some old school trucks. And it's like, but wait, no, what part are we financing? Are we financing the R&D, or are we financing the trucks, or like what's going on, right? But I'm not saying they're wrong. I just feel like, I think that's the bet you're taking.
I think we're also in quite a different place technologically than we would have been like 10 years ago. Because if I had seen a company like this 10 years ago when they started, I would have been a bit like electric and autonomous and taking on this massive conservative industry. That's a bit scary. But we've just come so far in terms of like batteries, which is the key thing for dealing with those really difficult temperatures and conditions in Sweden, and the lifetime and the range, that I feel like they're kind of picking out the things that are still pain points, like what should your roof be? Can you charge effectively? And then the autonomous element is something that they're putting forward a lot because it's very sexy and it makes them look very futuristic. But I suspect a lot of what they do is just moving things around and optimizing the charging, which I think is still really valuable.
What problem are you actually solving? It's funny, like going back a decade ago and going to a trucking conference and what's the future of trucking? No one had any idea. Like, is it going to be biofuels? Is it going to be hydrogen? Is it going to be electrification? Everyone was kind of on the fence about different areas. Today, one of my colleagues just got back from one recently. And it's like, it's all electric. Like no one's questioning that anymore. And interestingly, if you're saying electric is the route you have to go down, you do actually have to make some fundamental changes into how you charge, when you charge. Like the difference on your TCO calculation of whether you're paying 20 cents or 10 cents fundamentally changes the return of your vehicle. Where you can charge it physically between hubs fundamentally changes your model, because there aren't truck charging. There isn't significant truck charging infrastructure. So going on a case-by-case basis, from a hub-by-hub basis, on a company-by-company basis, and actually understanding it, like you have an opportunity to understand that business better than your customer does by having more experience. So you have the ability in this particular market to take that company, your customers on that electrification journey. And now that it's kind of clear that's the route everyone has to go down, they're all going to need to find a solution.
That's the thing that like, to your question about boring industries, that's why I think logistics, I think it's like 30% of Pale portfolio is logistics, I think. The reason I love it is that I think we can all agree that where we're going to be in 10, 15 years, kind of, and as you said, Craig, like 5-10 years ago, and Julia, like 5, like we had no idea. But like I think now everybody can squint and see, but there's quite a lot of R&D between us, a lot of CapEx between us, a lot of charging problems between us, but we can squint and see where we're all going to be. But it's like, and I think that's super fascinating to see. I think to also look at perspective, think about the fact that Tesla unveiled the semi in 2017. They said they would produce it in 2019. In 2022, I think it was, they started delivering their first ones. They're saying they're going to do high volume production plan or something, whatever it's called now, in 2026. I mean, the thing is, it's hard. It's hard to build these things so that it works, right? So I think it's building hardware, building novel form factors is not super easy.
Also, if you look at the relative fragmentation across the trucking market, like you're talking about a market that's a couple of 100,000 vehicles. It's not like hundreds of millions.
It's not a mass market thing, no.
Yeah, and if you look at it by vehicle type, vehicle classification, vehicle weight, vehicle volume, vehicle use case, like the market is not simple. And there's, particularly in the heavier weight classifications, there's a big difference between, are you building a cab or are you building a fully integrated vehicle? So whilst on the outset you go, yeah, it's a great opportunity, the CO2 impact is enormous, the potential upside is great, the more you dig into particularly this industry, you more you realize is the nuances you're after. And actually, for a lot of companies, only part of their vehicles are going to make sense from a TCO perspective to electrify anytime soon. And then the question is, which parts can you do? Which parts can you do cost effectively? And at what point are your sites or your charging infrastructure going to be insufficient? And having that plan far enough ahead.
Craig, you touched on the climate impact. I'd be curious to hear your take. I know you have like a very, very high bar at World Fund with your climate performance potential, I think it's called. Looking at Einride, obviously electrifying fleets, great. Making it like automated driving, I'm not sure if there's a climate impact there, but like, how would you assess, roughly speaking, a company like Einride from a climate perspective?
Yeah, I mean, we've looked at the freight market in general. Actually, the vehicle electrification and automation would actually meet our climate thresholds. So you're definitely over 100 million tons per year as the market opportunity. Trucking is only 8% of the vehicle market, but it's 32% or 30% plus certainly of the emissions. So it's a large enough part of the market, and it's the part of the market that is the most underserved today. Like if you want to go and displace an electric vehicle, like in a home setting, that's comparatively easy. If you look at it in the truck market, it's like 3% of the truck market. I think it was 3% in Europe last year, something like that. Like that's tiny. If you look at the ambitions to be able to decarbonize it, they expect to be able to get 70% of the market decarbonized by the end of 2040. In vehicles that last 20 years, you'd have to be replacing 100% of the stock today to meet that target, right? So we've got a lot to do, a lot to go. And the route on consumer vehicles is clear. The route on electrification of trucks, or the route for decarbonization of trucks, is clearer than it has been. But still, no, it's not a mass market product yet. But logistics in and of itself does meet it. But you have to be going after multiple vehicle classes. One single use case doesn't make it, and you need to be a broad enough technology to actually fundamentally move the needle. So for us, it does meet our climate threshold, but Einride is not the only one doing it. And kind of, Hampus, to your point, are you doing this with existing vehicles? Are you doing it with new vehicles? And like, if you're doing it with existing vehicles, why the hell are you doing it with Einride and not doing it with Volvo, who will give you all the financing behind it for their latest electric truck? But Volvo won't necessarily help you with all the logistics of how do you charge it effectively, how do you make sure it's cheap. And there, I think Einride's software platform, that understanding capability is what's going to help them. And it's also probably the problem in the market in terms of electrification. The driver side of thing, I think, is a secondary one at the moment, but it's one that the logistics companies probably feel more acutely than most.
Because this is the headache, right? Like, in a sense, I think Einride is saying, we can all squint and see the future. Let's just jump there and let's do all of it. And I think they could have said, hey, let's wait 5 years. Let's new vehicles come in. Or they can say, let's use other people's, planning for where to put up chargers, or let's do optimal charging. There is software. But they're just saying, we can raise infinite amount of money, so why wait? Why not do it ourselves? And I think that's always a bet, right? If they would have gone out and tried to find other providers for it feels to me that Einride is doing, in my view, too many parts of the stack. And they're not only using them internally, they're using them internally and they're selling them, and they have multiple alternatives. Do you want autonomous, manual? Do you want to just use the software? Do you want to use their vehicles? It just feels like there's too much of a shopping list. And that, for me, seems and smells like the model is not really working.
But do you not think you have to do that to make the TCO calculation work? It's one of those ones, the theoretical exercise, if you can use the lowest cost power and you can use all of these things, just switching to electric will reduce your cost by 10 to 15%. If you can make it autonomous, you can reduce your costs, make that calculation 30, 40% better. But that's the paper exercise. The reality is, if you do one fast charger a week where you're not in control of when the vehicle charges, say goodbye to your TCO calc, right? Same on not quite the same on a consumer vehicle, but if you have to go and do a fast charger at 60 cents a kilowatt hour, yeah, it's half the price of petrol, but that's a painful thing to have to do. And if you have to do that in trucking and logistics, there goes your margin.
Yeah,
right?
I think there are also 4 important components, right? There's R&D, there's CapEx, there's going down the wrong routes, and like having to repeatedly figure out stuff. All these 3 are essentially trying to optimize one, which is OpEx. So the question is, there is any other way that I can do these 3 cheaper than having to do them myself? It's always, and I'm not like, this might be the best way, but I find it super fascinating whenever I meet those companies. I love asking the question, oh, I see you're doing this fully vertically integrated. That's super exciting. If you could outsource one part of your stack and just get rid of this, what would you outsource? And really smart founders, I find, immediately say something. They're like, yeah, this is what we're doing. We don't want to do it, but we can't find anybody doing it. But if we could find anyone else, we'll just buy it, license it from them right away. And I think that's the question, is have they gone through that exercise?
Yeah. I mean, the price looks a bit eye-watering, right? In terms of like 1.8 SPAC, not IPO.
Okay, let's talk about the price. Let's talk about the price, because I mean, I want to cover this one because I was trying to do the math this weekend, and so 45 million ARR as of now, 65 million ARR contracted. So I mean, soon to be 65, and then 800 million of potential long-term ARR by joint business plans with customers. If we stick even to the 65, and you do the math on a 1.8 billion valuation, that's roughly speaking 40x revenue multiple for a public company that's not only software. Please help me understand. I personally don't understand it, but maybe, like, am I missing something big? Like, is there an elephant in the room that I don't see, or like what's happening?
Pre-seed investor.
Yeah, I mean, for me, this is painful. I mean, Julia, maybe you can know more from the long term. I mean, long term potential. You got to look at it in terms of where can this get to. If they become the dominant player in being able to electrify fleets, then the potential market value is absolutely enormous. I look at this a little bit and be like, you're doing a SPAC, not an IPO. You're doing a 30x multiple when the market is maybe, upside, you're getting to 10 if you have good margins. And your margins are likely to be appalling, because most of that I expect is going to be to cover the cost of the vehicles, because you're basically doing logistics as a service rather than like. I have some reservations at how, like, that price point, considering the company's gone through like 2 rounds of restructuring and then going immediately in. Okay, we think we've now got it. We're going to go for this huge price. Good luck if you can actually pull it off, and you can show that continued revenue growth. There's a chance that you'll be able to get that, and maybe that, and then a hell of a lot more, right? But that's pretty bullish.
Yeah, I mean, it's kind of like the company, especially when I saw them putting this autonomous thing first, but then having a very, like, much more traditional model behind it. The first thing I thought was like, oh, it's Uber again. Their whole thing was like, we're going to get rid of the drivers. It's going to be autonomous. That's how we'll be able to lower the price a lot. Now, in practice, they lowered the price a lot to get massive market share. And now everybody still uses Uber and everybody's still got a driver. So, and I think this also goes, Hugo, to your question about like why IPO in the US instead of in Europe. The questions that you're all asking are questions that I hear a lot from European investors and often from US investors. What I hear is like, but think about the TAM, they're going to like grow massively. And it's this idea of like, how are you positioning yourself? And I guarantee you there's going to be some like Tesla for freight phrasing thrown around. So I think it's the valuation is like comparison to other companies that were significant disruptors, rather than like looking at the assets and trying to price them and looking at the contracts. And they'll get a lot of buzz from IPOing in the US, and their cars look very cool. And everybody in the US is already seeing those new Amazon ones going around. And I think people are going to look at that and be like, that's cool. I want to buy a piece of that.
Yeah. Tesla for freight. Don't you mean Tesla?
Exactly.
Well, see,
Sorry,
how did
that was too easy. But it's a fair point. Like you see it in terms of potential rather than in terms of actuality. But at some point, you actually have to live up to the valuation, and they might be able to do that. As you say, the inbound interest might be so strong that they can actually deliver and grow, and they become a logistics outsourced company. Whether you're going to have good enough margins, I'm not entirely convinced, but I hope I'm wrong.
I find this complexity all the time because, like, I think companies IPO on a promise on a future, great company. I think companies SPAC essentially promising that in the future they will be able to promise that they're going to be a great company. I feel like for me it's all Maynard Keynes, like loving the kittens. After a while it feels like if you have the revenue you can probably IPO.
Yeah,
So
SPAC performance
you're
has
doing
not been great either, right, Hampus? Like the last couple of years, most companies at SPAC end up trading below their,
Well, we've seen some in the similar adjacent industries. I'm thinking Nikola, I'm thinking Proterra, like companies that went public through SPAC in the US during the pandemic or roughly during the pandemic and that went bankrupt later. Craig or Hampus or Julia, whoever wants to take it, but like when we think about SPAC, like what's the logic behind it? Like why would you go through a SPAC rather than just IPO through your company specifically? Like, what's the mechanism behind it that I'm not sure I completely get it yet. Like I get the instruments, but I don't get the reason why you want to do it that way. Is it just because it's easier from a complexity perspective?
time and scrutiny.
Scrutiny,
Okay.
exactly. And scrutiny we don't like, right? It's like if you want a high valuation, you don't want scrutiny. Sorry. Like for me, it feels like explaining crypto to somebody. I mean, there's an awesome logical mathematical thing underlying crypto that you can spend a lot of time on. But a lot of times when you look at the value, you're like, isn't this just like trying to tax evade a bit? Or like whatever. It just feels like, you know what I mean? There are definitely good SPACs where you look at them and you understand, I understand it. This is it. But I think when I see a SPAC a lot of times, for me, it just feels like, isn't this trying to just do the thing you're trying to do, but do it 3 years early before you're ready and trying to exit really quickly? Isn't that exactly what you're trying to do? And then people saying, no, it's really beneficial. It's way better for this and that. It's just like, it's just your investors wants out. That's like what I'm reading when I see SPACs. But again, that's what I see when people say ICOs as well. And like, which is like the crypto version, right?
a SPAC feels like just, a cowboy IPO. And maybe when I first heard about it, I was like, maybe this works if you have such a niche tech that like no one will understand, and you have like the person, the SPAC, before the reverse merger is super specialist in that thing. Maybe it's just something where through an IPO you wouldn't get the value across, but the companies that I've seen do this have mostly just been looking for speed. And I suspect that's what's happening here. Like Einride is probably looking at the supply chain disruption that's been happening the past few years, looking at companies that can't hire drivers, and they're like, this is our moment, we have to go now. In 3 years' time, maybe like Volvo and Tesla will have sorted out a better optimization system and charging system.
Kind of, that's the point. But you're right. Like if the window is open and the only way that you can actually make use of it is a SPAC, then I understand the rationale as to why to do it. Particularly because without it, if the private market is not giving you the valuation or not giving the capital that you need to even be able to be considered a competitor, like that might be the route that you have to go down. But you don't have the same sort of scrutiny. You don't have the same sort of broad base of underwriters, people who are in and then are going to stick around for the long term necessarily, compared to a SPAC versus an IPO.
I can also see the other reason, like as Craig said it also, if you can't raise the money, why not SPAC?
And that's one of my question as well on that is, long story short, anywhere between, like they will raise anywhere between 150 and 300 million. That's my understanding of it. Can you not raise that from the private market today? When we look at Base Power in the US raising 1 billion, when we look at, and even for that company, even for Einride, EQT, I think is going to, and Nordic Ninja just invested in 2025, like 100 million. So like, I'm just curious, like, Do you think the private market's not good enough today to raise 150 to 200 million?
I think that you can raise 100 million to $1 billion if you have a company that investors wants to invest that money in, right? I think the problem is that I think Einride has pivoted around quite a lot. I don't think they have full product market fit. I think they have a lot of expensive structures doing it. I think that they have probably depleted the fundraising market a bit. The funds that do 100 to 500 million checks have talked to them and have been frustrated or have invested already, right? So they're sitting there and thinking, why would we do it? And also, like, I mean, I joked about it in the beginning of the call, but I mean, Northvolt was fairly recent, which might think people will look at this and say, please just tell me how you're not doing a Northvolt now. And I think that's definitely costly. Whereas the SPAC market is like, you flip it. Like you essentially say, you support the SPAC and then we sell it right off away. And you don't have to outrun the bear. You just have to outrun the other guy. Like if you join the SPAC and can flip it to another person who's dumber than you, then it's going to be great. Or smarter than you. You don't know, right? Like I think the question you're asking with the SPAC is more, do you think you can buy cheap, sell high very quickly? Then you SPAC. And sometimes companies are super successful. They needed that other 250 million and then they get the escape velocity and they're building great companies. So, I mean, this is the thing of fundraising. I think about it every single time we invest in a company and they reinvest 2 million and then the next round they raise 10. And I'm like, oh shit, there is 10. That's insanely impressive. And they raise 50. I'm like, oh my God. And sometimes thanks to all that money, they get a crazy escape velocity and they build all the product and get all the customers. And sometimes not. Sometimes they shouldn't have raised that much money that quickly and they should have stuck and got product market fit.
And in the private markets at the moment, if you have good metrics that particularly generalist investors can understand, which is also the type of investor you'd expect to be investing in a traditional IPO, by the way, in terms of the way that they would analyze the companies would be very similar. Particularly if you have high growth rates, you've got better multiples in the private markets than you do in the public markets. But you're talking kind of 15, 16x revenue rather than 40x revenue. And people have been fighting over deals. So, I mean, our friends in more of the growth buckets, they're being priced out of certain deals. Like once you've got a company that actually has good metrics and clear growth and clear product market fit, there's a very healthy market in the private space at the moment. Like, if you have that, why would you need to take it public and take the risk associated with it, unless you're actually trying to provide potentially liquidity, or you think it's going to deliver you something else? I assume that they found it quite hard to find investors, and they might find it easier in the US versus in Europe.
That's a great topic to touch on before the end of this episode, but come on, another great European company listing in the US, like the story all over again. Like, how do we feel about that generally around the table? How do we feel about European companies again listing in the US, not in Europe? Like, feels like the market's broken here.
No, but I think one of the reasons I think the solution I feel clearly for this is, let's say, where would they list otherwise? Frankfurt, Copenhagen, Stockholm, like London. I think it's very obvious that every time a European person complains about European companies listing in the US, we need a European stock exchange, because every single stock exchange is going to be too small in Europe, and not because Europe is small. Like, Europe is the same size. It's just like if we fragment and divide it on many different markets, of course it's going to be smaller. So like I'm super bullish on saying let's make sure we have a Delaware of Europe. Like let's have an EU Inc. Let's make sure we have an EU stock exchange, because I think that's the only way you can actually offer enough simplicity and simple process and not have to go through different markets, and also the investor pool. If you list on Frankfurt, you can get more German investors. If you list in London, I would say I think this is clearly a call for European stock exchange.
But the advantage of the US there is that everybody invests in the US. Your kind of point, like you'll get more Germans in Germany, more French in Paris, more UK, maybe some more institutional out of London. But ultimately, I wish I had an example to hand, but you get a European company listing in the US and the majority of the buyers of that company are Europeans. It's like, well, but why is that? Because it's everyone in Europe looks at the US markets, right? So where you list kind of not irrelevant, but you invest in the market that has the most depth. and the market that has the most depth is America. Like, unfortunately, that is just the way it is. And until there's a European market that has enough depth and enough ambition for people who are willing to take these kind of bets, there's only one real credible choice to invest if you want to raise a large enough amount of capital, and that is US.
Yeah, they're going to get a ton of publicity out of this. I mean, I hadn't really heard much about it, but I guarantee like a big SPAC like that and something relatable in the US, a lot of publicity.
And actually allow them with the customer base more credibility as well, right? It's much easier. Like, why are we working with this random company from Northern Europe? Like, why are we buying their trucks and logistics services when we're a company based in Texas? It's a hell of a lot easier being like, okay, we're buying this service from a listed entity, an American listed entity. Yeah, that's an easier sell internally. Like if you're buying from a startup versus buying from a listed entity in a very conservative space, that's going to be an easier position for them to be in.
What's the effect of such a large IPO from a European company? Like when we think about liquidity in Europe and people complaining that there is no liquidity, like that seems like a great counterexample, at least in the climate space, right? So what do you anticipate the effect to be of such a large IPO?
I think we've already seen there has been a couple of IPOs already. I mean, now most recent I think was Klarna in Sweden at least. I think that every time that happens, I think that there's a sigh of relief throughout the whole industry, from LPs down to pre-seed investors, and I think that it means that the system works, right, in a way. And I think it's the first time you actually get a feedback loop. Like, as like everyone else, now you figured out how the pref stack fell out. Like, previously you could sit there with some kind of like fake markup money and they're like, okay, so that was what happened. So I think it's really important that it happens. And I think it does happen. And thankfully it seems like the market is there again, right? Companies are doing IPO, investors are getting money out, LPs are getting money out, and we all get a feedback loop. So I think it's great. We all need every single of these moments. And of course, like there's also negative feedback. When a company tries to list and it doesn't work, that's also interesting.
All right. Well, thank you so much for today. It was a pleasure. Again, I think we got quite a great overview of this market of Einride's IPO. So thank you so much for coming to the show today. And I'll be talking to you soon.
Thank you.
Thank you.
It was great. Talk later.
Thanks. Bye-bye.